It's a delight to have with us Mr. Vijay Valecha, Chief Investment Officer at Century Financial. Welcome with us. What we see today in the movement of the oil price is the fact that maybe we can say that we did not have an impact of the geopolitical premium with the fundamentals of the markets that are pricing in these drops in the prices. Can you tell us more about this image?
Well, I wouldn't say that the geopolitical factors are not playing on oil prices. They're actually playing a major impact. We saw a complete rebound last week on oil prices, and that was all owing to the geopolitical pressures. We do have a definite slowing of demand of oil and industrial requirement as well. That is definitely impacting oil prices. But the main reason that oil is still above $75 on the Brent is only and only owing to the geopolitical tensions. So it is just a matter of time now where we will come to know whether the geopolitical tensions will be the bigger play or whether the lack of demand will be a bigger play on oil prices.
Vijay, they all said that the geopolitical premium, for example, didn't lead to an increase of $10 or $15 in the oil price in light of the latest developments of what's happening in the Red Sea. And perhaps it was a premium, but we don't know the volume of that premium. It was less than $10 and $15. Now, what are the different scenarios that you are looking into, Vijay, especially when it comes to those risks at the Red Sea? Because it seems that they will continue and they're prolonged.
Absolutely, the tensions in Israel Gaza Strip as well as in the Red Sea are a major factor playing on oil prices. The premium you could say could have been close to $10 to $15 on Brent, but the premium has not come in so much is because in spite of the geopolitical tensions, we have not seen major disruptions in the supply of oil so far. Only and only if we actually see disruptions in the supply side of oil is when that $15 premium actually comes in fully. At that time, we could see oil prices go up almost $7.5 from current levels. So you could say Brent close to around $83, $84. But that being said, if there's actually no disruption on the supply, a slight delay in reaching the tankers reaching the places might not be that big a premium. Those are the major risks we are seeing. On the other side, the major risk that we can see in this year going forward is a deliberate cut of supply from the OPEC Plus, which is definitely on the cards. We might see the OPEC Plus actually reducing oil supplies even further, and that could actually make oil prices spike up. But all these factors are not as important as what we are majorly seeing, the slowdown in demand. So there's definitely a slowdown in demand of oil, and although the demand is slowing down for industrial production, the markets in the US and the Europe continue to make all-time highs. There's a big difference between the different languages being spoken by the different segments of the market right now, and that has to come to a parity at some point.
When it comes to the OPEC plus cuts, if we are to compare it with the reaction of the markets back in September after we have reached the levels of $100, the reaction has changed lately, and especially with the end of the year where we still have cuts in 2024. Today, how can we explain perhaps this? And of course, we might have an increase knowing that now we did not have a reaction similar to that which we had back in September when we had the voluntary cuts.
Well, market always goes as per expectations rather than the news when it actually does come in. We were expecting a very harsh or a very, very decent sized winter this year, which has not come in. This winter, just like last year, was the warmest year of the world. We actually are seeing a much warmer winter as well. So the demand for oil and oil products has not gone up as much as the anticipation was in back in September. Even a reduction in supply now will have to be substantial for taking the oil prices above the 85 levels. A small cut in oil levels will not actually bring in that big of a spike in prices.
Mr. Vijay Valecha, Chief Investment Officer at Century Financial, thank you so much for being with us.
Thank you so much.
It was a pleasure, sir. Bye.
Same here. Thanks a lot.